All right, so let's begin the show, and let's begin the show today with your financial portfolio queries that our experts will be answering today. And as experts, today I have with me Samisha, Head Online Business, Axis Securities, and Pankaj Mathpal, MD of Optima Money Managers. Pankaj and Sameer, good evening and welcome to the show. For all the viewers who have just tuned in, once again, I'm going to flash our WhatsApp number and email ID because a lot of viewers keep saying that they do not have a WhatsApp number or they don't know where to send us their queries. So here it is, 865-797-4571 is the WhatsApp number, and the moneyshow at etnow.tv is the email ID where you can send across your entire financial portfolio and also any specific query related to any fund, your investment strategy, your insurance. We can have it answered by our experts on the show. All right, so let's begin, and let's take first question, which is for Pankaj. Pankaj, this is Jayanta's question, and he's written this question via email from West Bengal, and a very interesting question. He wants to know whether it is the right time to invest lump sum in small caps or mid caps. A very specific category that he's asking about, and also a category where at least the investors who've been witnessing a lot of profit are now looking at little amount of pain in terms of their portfolio returns. Now, it is important to have such kind of a broader market exposure in your portfolio, Pankaj, definitely. Although if you need stability in your portfolio, you need to have large caps. But to enhance the amount of returns you want in a longer time horizon, exposure to mid cap and small cap is important. Now, a lot of times when we are seeing such kind of a volatility, an investor might be skeptical about putting their money and, betting for long term, and especially when it comes to a lump sum investment. So do you think it's the right time to put a lump sum investment in mid cap, small cap? And if it is, we still don't know about Jayanta's rest of the portfolio, so we really can't comment on whether this is his first investment in this category or not. But just assuming if it is, what should be the exposure like? How much should be the exposure like? Pankaj.
Good evening. The information is limited, but in general, if I reply to this question, first thing, markets are volatile. It's not the right time to invest in lump sum, whether small cap, mid cap, or large cap. Better you invest in diversity. Better invest in multi-asset funds or dynamic asset allocation fund at this moment, or invest in a staggered manner. And when the question is especially about mid cap and small cap, my suggestion would be that you should avoid investing in lump sum at this moment when markets are volatile and valuation of small cap and mid cap are still high. So for lump sum, as I mentioned, that hybrid funds may be a better choice. But yes, in your portfolio, you must have allocation across market segments. So along with large cap, mid cap, small cap should be in your portfolio. So one thing, through SIP route, definitely you can have some allocation. Second thing, if you have lump sum amount and you want to top up your portfolio or you want to enter in this segment, in that case, you can invest in staggered manner in the next 4 or 5 months. Whatever lump sum amount you have, invest in a liquid fund or ultra short duration fund. And through STP route, you can invest in small cap fund. But in one lump sum at this moment in small cap, mid cap can be very risky.
All right. So Nippon India large cap, ICICI Pru multi-asset, Motilal Oswal mid cap, Tata small cap is what is recommended to you. And obviously, you need to be careful about the installments that you are going to be putting in these funds. One more question we will take, which is again for Pankaj, and we have the viewer on the phone line with us. Raghu wants to ask his question from Bangalore. Raghu, hi, good evening. How are you doing today? Thank you so much for sending us your question.
Good evening, I'm doing good.
Hi, hi. So, a very interesting question you have. Why is over diversification in mutual funds not advisable? Is that what you want to know?
That's right. I mean, I have invested in around 16 funds, actually majorly inclined towards large caps, but I keep seeing that everyone says it's not good to be, over diversified. So I want to
Exactly,
know
yeah.
yeah,
Okay,
I want
okay.
to know the thinking beyond that.
So, just out of curiosity, do you know how a mutual fund functions? Are you aware of the kind of stocks there are in your particular funds? Because 16 is a lot of funds, even for you to track. Do you handle your own portfolio, or you have given it to someone to handle it?
I do handle it on my own, and I frequently
Okay.
use the overlap calculator. Yeah,
Okay.
there is a bit of overlap, maybe around 30% sometimes in a couple of funds,
Okay. Okay.
but
Also,
still,
what is the investment that you're putting in? What is your investment that you're putting in? Because if your investment amount is really hefty, then it still can be okay to have 16 funds. But then that really needs to be a very huge amount. So what is it?
The current NAV in INR is probably 20 lakhs.
No. How much are you investing? What is your investment amount every month if you're doing an SIP?
SIP is around 45,000.
45,000. So 45,000
Yeah.
SIP, for that you have 16 funds. Okay, I do not have your portfolio details. So I really cannot comment on what is overlapping on what. But then theoretically, why do we say diversification or over diversification is diversification is important, over diversification is not important? How having so many funds leads to the case of over diversification is what something we will understand from Pankaj.
First thing, diversification is very important because your objective is to reduce risk and maximize returns out of your investment. But when you over diversify, there are multiple reasons that why you should avoid it. First thing is monitoring, because when you invest in mutual funds, you want to monitor it regularly. If you want to rebalance your portfolio, it may become difficult if you have multiple funds in your portfolio. More important is that when you diversify, as you said, that you want to check whether the portfolios are overlapping or no. If portfolios are overlapping, it means you're not getting any benefit, because ultimately, if you have two schemes in large cap category, for example, and both the schemes have similar portfolios, so there's no advantage of that. But on the contrary, for example, if portfolios are not overlapping, it means what? There are 100 stocks in large cap. When we say large cap portfolio, so large cap fund will have stocks from top 100 companies. Now, say, for example, there is no overlapping. So out of 100, say in one fund, 60 stocks are there, and additional 20 stocks are there in another fund, which is not overlapping. So what is happening? Out of 100 stocks, 80, 90 stocks are there in your portfolio overall. But the objective when you invest in mutual funds, you want to have high conviction, uh, means less stocks in your portfolio, so that your portfolio can beat the index. But out of 100 stocks in index, if 80, 90 are there in your portfolio, out of these 2, 3 schemes you have, then how your portfolio will outperform the benchmark. So that is why you should select one fund or two funds in some cases. But if you have multiple funds in the same category, it means you are not getting the benefit of diversification. Second thing is, as I said, if you are not able to monitor properly, so neither the risk will be managed, nor you will be able to beat the benchmark. So that is the reason that why should you avoid diversification, over diversification. Yes, in your portfolio, what you should do, you should make a core and satellite portfolio. Like, for example, you have 4 or 5 funds where large cap, large mid cap, multi cap, etc. And some allocation can be in thematic fund if you want to beat the benchmark or you want to get more returns than the broader market. So making a portfolio with 6 to 8 funds where you have diversified funds as well as 1 or 2 thematic funds can be a better choice, but not that multiple funds in the same category. It will not give you any benefit.
All right, Raghu, quickly, anything else you want to ask Pankaj? Was that good enough for you?
No, that was really helpful. Thanks for that.
All right, thank you so much. Thank you so much. All right, let's move on. And we have a live viewer connected on the phone line. I have Mr. Suresh. Good evening, sir. How are you doing today? You're calling from?
Yeah, ma'am. Good evening. I am from Chennai.
All right, sir. Thank you so much for sending us your question. You have a couple of questions. You want to identify the best mutual fund. You want to invest almost 4,000 rupees in mutual funds. And yes, we agree, finding the right financial consultant is quite tough. But then how do you make the most of it? And, how do you identify the right distributor or CFA for yourself? Individual stock versus mutual funds, what is right? And in mutual fund managers were buying stock at overpriced. All right, so that is what the question is. And okay, so all in all, you have 5 questions. Sameer is there to answer all of your queries. Is there anything else you want to add?
No, ma'am. No, only for these questions I need an answer. That's all.
Sure. So I believe that you do not have a mutual fund portfolio yet. Is that right? Can we say that?
That's not sure.
All right. Sameer.
Kavita ji, thank you so much for having me here today. Suresh ji, you have asked very valid question, and many of retail investors are actually facing this thing. First step is like no, when you first question is like no, how to identify your best mutual fund scheme, right? So before that, there is one thing which every investor has to do. That is like no, they have to define the clear financial goal. They have to understand their tolerance level, and they have to define the investment horizon. Once that step is done, then you have to then you have to narrow down your search to different there are multiple categories mutual fund available, so you have to figure it out which category you wanted to invest, right? Once that is done, then you have to what you have to do, investor has to do is like no, you have to identify the scheme which consistently perform across different market cycle. Say if markets are up and when markets are going down, what kind of a return that scheme is generating, that information which you have to track. Second is like no, once you have to identify the AUM of that particular scheme. If that scheme has a too large AUM, then like no, there are fair possibility it may dilute your return. And if that scheme has a very small AUM, then that can be a pretty riskier one. That thing you have to consider. The third thing you have to consider is like no, you have to look at the key metrics of the scheme, which is like no, you have to analyze the what is the expense ratio for that scheme, what is the sharp ratio, standard deviation, turnover ratio. There are multiple other things like no, which you have to see. This thing can give you a overall performance of the scheme, as well as the performance of the fund manager also. The third and fourth and most important one is like you have to see the track record of fund manager. What like no, the duration from duration that fund manager is managing that particular fund, the return they have generated over a period of time. And if fund manager is managing other scheme, right, what kind of return he is generating there. So these are the things. If you manage, then you'll be able to if you put this kind of filter, you will be able to identify the right mutual fund scheme, right? Your second question was that individual stock or mutual fund. So if you are familiar with the stock market, or you do not if you are not familiarized with the stock market, and or you don't have sufficient time to uh, track track the performance of the stock market on regular note, in that situation mutual fund can be a great choice. But if you are experienced investor, you have time to analyze, and you have a fair bit of understanding about the charting and fundamental analysis, then in
Right.
that situation
Mm-hmm.
stock can be a good
Right.
option.
Right. All right, Suresh, I hope that gets all your queries answered. And we have more viewers waiting for their queries to be answered. But then it's time for a quick break. I have Pankaj and Sameer connected, and we are still doing your life financial planning on the show. Welcome back. You're watching The Money Show, and we are doing a live financial planning. I'm joined by our live viewer from West Bengal, Mr. Jayanta. Good evening, sir. How are you doing today?
Good evening. Good evening. Hello.
Okay. Yeah, sure. Um, I think, Pankaj, you have this question. Sir, do you want to ask your question?
Yes, madam, I have put a question previously. On
Yeah.
the current scenario, actual
Yeah.
in the market scenario presently, would it be a right time to invest
Sure.
in small or mid cap?
Yeah, sure. Pankaj, I'll come to you directly. We are actually short on time also, and I think we answered this question, the very first question on the show also. We got him on the phone line. Do you really want to explain to him once again, quickly?
See, markets valuation are expensive, markets are volatile. So this is not the right time to invest in small and mid cap in one lump sum. You can invest in staggered manner. Better right now invest in flexi cap or large cap funds or multi-asset fund. And later on means you can add these small cap and mid cap. Second thing, if you want to do SIP for long term, then you can consider this small cap and mid cap.
कर दिया, समीर का Right, so that's the answer for you, Mr. Jayanta. All the best. And in fact, we answered your question in the beginning of the show also, Mr. Jayanta. We couldn't connect with you earlier, but then just in case you missed on anything, you can get the show on the channel's YouTube. The Money Show, today's telecast, you will get your answer as well. And on that note, thank you so much, Pankaj and Sameer, for being on the show and helping our viewers with their financial portfolio queries. And as I sign off, in this episode of Leaders of Tomorrow Season 12, we bring to you highlights from our Chennai Springboard. As part of our Women Mean Business segment, we feature Dr. Srimati Kesan, founder and CEO Space Kids India, in conversation with Ritvika Gupta, anchor and news editor, Times Network. This segment explores the space technology ecosystem and space exploration challenges for women in the tech space. Additionally, the episode also features a special keynote from Anto Allen, head business banking and Agri IDFC First Bank, on the evolving landscape for Indian MSME in the business landscape, tailored solutions for growth stage startups and more. Listen in.
If you like this video, then like, share and subscribe to ET Now.